Shares of Starbucks are higher here in the pre-market after the coffee chain brewed up an 11% rise in same-store sales in the U.S., driven by a 6% price hike. Starbucks CFO Rachel Ruggeri joins us now alongside Yahoo Finance's Brooke DePalma. Good morning to you both. Rachel, I'll start with you here. Are you surprised that you had a lot of success in pushing through those higher prices in what is a slowing U.S. economy?
You know, we were encouraged by it. Those higher prices are really in response to inflationary pressures. And so we continue to try to find value for our customers. And one way to do that is as customers join the rewards program, they get discounts. They can earn free beverages and food and other items. And it creates more traffic for us as well as increased spend. So it's a win-win all around. We also continue to find ways to innovate so that, you know, we have a competitive advantage in terms of offering more personalized beverages. So we try to focus on ways that we can continue to add value regardless of what the inflationary pressures are or the environment around us.
And here in the U.S., this is the 5th consecutive order of increased ticket size. Now, that was largely important to what Howard said was continued strategic pricing action and food attachment. But how long, Rachel, does Starbucks expect this affordable luxury to be something that customers are willing to spend on? And can we expect further price increases this year and into fiscal 2023?
Well, as I've said, our pricing in the past year in FY22 was really in response to inflationary pressures. We'll have some of that this year based on annualization from moves we made last year, but we expect our pricing to return to actions that are more on a historical level. What we focus on is really how do we sustain that ticket? Because it isn't just pricing, it's actually volume as well. We've seen our customers purchase more. That's evidenced in increased attach. So we're seeing increased volume. And that comes down to making sure that we have beverage and food offerings that, you know, give us a competitive advantage, give customers a reason to come in, something that they maybe can't make at home. And so we continue to innovate in those areas. And I never want to underestimate the fact that the experience our partners create for our customers is what continues to differentiate Starbucks. And so we know that as we invest in that experience for our partners, it's going to create better value and a better experience for our customers. And we think that helps give us a resiliency, you know, even in this very dynamic environment.
Rachel, do you think Starbucks is shutting out a large part of the population? I paid, you know, I have a pretty good gig, but I paid $8 for my coffee this morning.
Yeah, you know, what I would say is, we have to be worth paying for. And that comes down to the experience, the offering. And that's why the reinvention plan in the U.S. is so important, because it's really about ensuring that we can attract and retain the very best talent and ensuring that that talent has an environment that's conducive to serving the demand. And I think that, you know, allows us to create a great experience that, in my opinion, is worth paying for. As long as we continue to do that, you get the very best coffee and you get the very best service. You know, that's going to be what gives us a competitive advantage as we move forward.
Let's talk a little bit about the people behind the counters, those partners that are fulfilling those orders. Year over year, retention has increased by 1%. You're already up 4% from fiscal Q3. Wall Street, Starbucks, both optimistic that this reinvention plan will certainly help those baristas fulfill these custom orders. But we can't turn a blind eye to what's going on with the unionization efforts at 246 stores that have voted yes to certify. Rachel, can you please clarify where exactly you are in the stages to bargain with those stores, and has that begun yet?
Well, you know, as I've said before, as you heard from the company, we truly believe a side-by-side relationship with our partner is the very best path forward. But we respect the process. What we're focused on is continuing to create the very best experience for our partners. We know that that has worked for the last 50 years, and we're confident it actually underpins the success of our new era of growth. So that's where we're focused, and that's where our intention is directly spent.
Rachel, what does success look like? How can investors measure when any concerns about employees, they've started to temper down and you do see a more, I guess, engaged workforce?
Yeah, you know, it comes down to the metrics that we've shared, particularly at Investor Day, around making sure that as we move through the reinvention, we're focused on creating a more stable environment. And that's leading to reduced turnover, increased retention, and the ability to be more effective in terms of supporting our partner labor hours. And that's all bookend, in my opinion, through increasing partner engagement and increasing customer connection. There's a lot that goes underneath that, but as long as we keep our eyes on all of those, let's say, key metrics, and we see them move in the right direction, then we have confidence that we're doing what's right for our partners, and we continue to listen and get feedback. That's incredibly important so that we know that we can check and adjust along the way so that we are indeed creating the very best experience. It's critical for our brand, and it's our competitive edge. And so that's how we continue forward, is making sure that we're checking, adjusting, and moving forward with the investments that we know matter to our partners.
And speaking of the investment, you're making major headway overseas in China. Of course, we did see a decrease of 16% this quarter in terms of sales there. But Howard Schultz, uber confident here that Starbucks will emerge not only as undisputed leader in the category there, but likely the #1 Western consumer brand. That's a big bet over there. But the strain over there is continuing with the zero COVID-19 policy. Can you break down how exactly Starbucks will come out on top, even if the zero COVID-19 policy continues to stay in place or rather come out at a slower pace?
I think the couple of things that I would point to is obviously mobility is critically important to our success. But what we've been focused on is continuing to find new ways to meet our customers where they need us to be and to create new occasions. Store growth is one way to do that. So we're growing in new and different cities. We're in over 230 cities today, but we're continuing to expand and meet customers where they need us to be with different formats. We also continue to increase our digital offering. And so digital is now 44% of our overall sales. That's basically, it was non-existent 2 years ago. So that gives us an opportunity to meet our customers through MOP, through delivery, and creating experiential convenience in a more digital environment. That allows us to extend beyond the four walls. And those are ways for us to continue to grow our connection with our customers and to continue to increase our brand. But I think it's all critically important to continue that in China, we have been continuing to invest in our partners and making sure that they have what they need to create the best experience for our customers. We had the highest customer connection scores we've ever had in Q4, which just speaks to the resiliency of our partners, but the focus we have on the foundational aspects that we believe will continue to give us a competitive advantage, and then we'll be ready to support the demand, as mobility restrictions lift, but we'll also be able to support the demand in new and different ways, evolving with our customer needs.
Rachel, is it tough having Howard back asking for 4:30 a.m. sales reports?
Keeps me on my toes, that's for sure. And I think, there's definitely a good aspect around just overall, we're an everyday business. We're 7 days a week, and I think it's important that we all operate that way. And so, I never stopped looking at that report at 4:30 in the morning, but it creates a level of urgency that I think it's incredibly important for the type of business we're in.
Rachel, you seem just as excited as the everyday Starbucks consumer for the holidays. You helped your store turnover for the holidays this week. So I have to ask, what is your go-to drink, and how optimistic that we could see sales reach the same highest level that we saw for the PSL? Do you expect a similar launch for this holiday menu?
One of the reasons I enjoyed helping to set up the stores for the holiday is I'm a customer. I love going in and see everything turning red. It's exciting to me. I think it's a great signal about what's to come. And so being able to set up, help me understand, what are the partners excited about? What drinks do they love? What products do they love? And it's always been clear to me that if our baristas, if our partners love items, then it's going to be successful. And there was a lot of excitement as we were unpacking the boxes and looking at the Starbucks cards and talking about the food. It's 25-year anniversary of the cups, the holiday cups. And our partners were excited. We had a partner I was working with, Savannah, and she was super excited about this year's design. So, I think that gives me a lot of encouragement that we're going to continue to see a great holiday similar to what we saw in the fall. But, time will tell. But for me, I drink a grande espresso. That doesn't change. But I do say that I get pretty excited about the iced sugar cookie almond milk latte. I tried it last year hot, and then I tried it cold. I love it cold, but it goes both ways. And so I think it just offers another occasion for me and another way to connect with the brand.
All right, we'll leave it there. Starbucks CFO Rachel Ruggeri alongside our very own Brooke DePalma. Appreciate it.